Portugal just flipped the switch on the U.S. tax treaty. And if you are a remote worker, your 0% tax era is officially over. The NHR regime that protected an estimated 74,000 foreign residents has been replaced by a system that sees you as a revenue source, not a resident guest. Most nomads will lose 20% of their take-home pay this year. Portugal's AT issued over 11,000 residency audit notices in Q1 2026 alone. The era of the easy non-habitual resident regime is gone, replaced in 2024 by the narrower IFICI framework, Portugal's Autoridade Tributária, AT, 2026 tax code update. While the original NHR offered a 10-year holiday on most foreign income, the new Incentivo Fiscal à Investigação Científica e Inovação is strictly limited to researchers, tech professionals, and startup employees. Portugal's Autoridade Tributária, AT, 2026 tax code update. Heading into 2027, the Portuguese authorities are aggressively auditing remote consultants who use the treaty to shield active income. Unlike 2025, where you could arguably fudge your job description, the 2026 digital ID systems mean the government knows exactly where your active labor is performed. If you don't fit the new narrow categories, you are pushed into progressive tax brackets that climb rapidly toward 48%. Portugal's Autoridade Tributária, AT, 2026 tax code update. For an American nomad earning $150,000, this shift isn't just a paperwork change, it is a massive economic liability. A major catalyst for the ending of treaty-facilitated savings is the hard line between the D7 and D8 visas. As of June 17, 2026, the D7 passive income visa is strictly for Social Security, pensions, rental income, and dividends. Portugalist 2026-04-29. Remote workers are now forced onto the D8 visa, which has a significantly higher income floor of approximately $3,500 monthly. Get Golden Visa 2026-06-17. The trap is that D8 status rarely confers the old NHR benefits. You are trading your high U.S. source salary for a high Portuguese tax bill, according to Investopedia. While Portugal remains a top lifestyle and healthcare destination in 2026, the financial math for active earners has decoupled from the lifestyle perks. Investopedia 2026-06-09. You can enjoy the beaches, but you are no longer doing it on the IRS's dime. The dream of retiring to the Algarve at 60 is real, but the 2026 numbers are sobering. 24/7 Wall Saint 2026-06-19. If your retirement includes remote consulting to supplement a pension, you are entering a double taxation zone. Portugalist reports that for the D7, only true passive income counts toward residency. Portugalist 2026-04-29. If you show up with a $50,000 remote contract, you may be disqualified from the D7 and forced into the D8, which carries higher Social Security contributions. In 2026, Social Security for the self-employed in Portugal can eat another 21% of your gross. Portugal's Autoridade Tributária, AT, 2026 tax code update. This makes the Algarve beach life roughly 35% more expensive than it was just 2 years ago. The treaty no longer provides a shield against these local payroll levies. Since you can no longer rely on a 0% local tax rate, the Foreign Tax Credit, FTC, is now your primary tool. In 2025, many nomads use the FEIE to exclude up to $126,500 of income. But in 2026, if Portugal is taxing you at 30%, using the FEIE is actually a mistake. You should pivot to the FTC using IRS Form 1116. This allows you to credit every dollar paid to Portugal's Autoridade Tributária, AT, against your U.S. tax bill. This strategy is vital because the US-Portugal Treaty doesn't prevent double taxation. It only provides the mechanism to mitigate it via credits. By 2027, the nomads who win will be those who stop trying to avoid tax and start optimizing where it is paid. If this pivot just saved you money, hit like. It helps more nomads find this channel. For those looking to bypass the income requirements via the Golden Visa, the landscape in June 2026 is equally restrictive. Real estate investment is dead for residency. The only path is a fund investment of at least €500,000. Get Golden Visa 2026-06-17. While this grants residency, it does not grant NHR tax status automatically. You will still be a tax resident if you spend 183 days in the country. Portugal's Autoridade Tributária, AT, 2026 tax code update. This means your global portfolio, dividends, interest, and capital gains, is fully exposed to Portuguese tax at rates up to 28%. Portugal's Autoridade Tributária, AT, 2026 tax code update. Unless your fund investment is structured within a specialized tax-efficient holding company, you are essentially paying for a residency permit that triggers a massive audit of your worldwide wealth. To survive the end of the tax-free era, you must decouple your entity from your residency. Many sophisticated nomads are now using a Wyoming LLC as a disregarded entity for U.S. tax purposes, for FIA. This allows you to claim the FEIE on your U.S. return while managing your distributions into Portugal. By keeping your salary at a reasonable level and leaving the rest as retained earnings or reinvesting it via interactive brokers, you minimize the amount of income Portugal can touch. However, the 2026 CFC rules mean you must be careful about undistributed income. If Portugal deems your Wyoming LLC to have its place of effective management in Lisbon, they can tax the corporate profits even if you don't take a distribution. This is why having a hub elsewhere, like a UAE free zone company, is becoming the standard for high earners heading into 2027-17. You now understand why the US-Portugal tax treaty era of easy savings is over, and how to pivot to the FTC strategy. But a tax strategy is only as strong as the entity that holds your money. In my next video, I'm breaking down Wyoming versus Dubai free zone versus Estonia e-residency, 3 offshore LLC structures that cost under $500 to set up and are fully compliant with these 2027 rules. Subscribe so you don't miss it. That comparison is the decision you actually have to make.